And just wait for a second here to get to the point where I show you the chart that's going to blow your mind. You can't unsee it, and when you see it, it's going to completely change the way you invest starting today. It might make you make some actions today when you see this chart. Is this the time to dump your gold mining stocks? I've been considering that for myself personally, so I thought I'd share that with you. I know a lot of you will take a little bit of guidance from what I do. If you want to follow me, don't copy me, because I know that there's a big stock market correction or economic breakdown coming up. And in general, when that happens, a lot of things get hurt together. And that includes the mining stocks. And I've told you that. They'll go down too at first. There's margin calls, there's panic selling. A lot of babies get thrown out with the bathwater. Certainly, gold mining stocks are not going to be immune to all of this. In fact, even very recently, gold prices hit an all-time record high in US dollars of $2,974 and have since dropped back by about $100 per ounce. And that was from February 24th. And meanwhile, while all of this happened, the entire precious metals complex took a hit. Don't think company-specific risk, think trading and sympathy. The entire complex, gold mining stocks, silver mining stocks, all dropped between 5 and 10% on average. What I need to know is, how do gold mining investments behave in times like the global financial crisis, just general recessions too, and how do they behave during the dot-com bubble bursting? And what about the big one from 1929? What happened to gold mining stocks over those periods? And view it all through the eyes of historical precedents, which I love to do. And I please humbly ask you to click like. It helps people like us help more people like us. And you know for a fact, nobody is seeing this coming. Maybe people on this channel, maybe people who pay attention to this stuff, and people are worried about debt and worried about the economy and stock market, whatever. They're not really understanding. What I'm going to do is overlay some charts of gold prices, and I'll mark off when the big events happened, and you'll see how gold did. And I took a few charts of just a couple of the biggest miners. I own both of these, Newmont Mining, Barrick Gold. How did they do in times like the global financial crisis, 2007, 2008, or the dot-com bubble bursting, 2000 and 2002, and even the big one from back in the day. But you might say, Peter, aren't those all outliers? It's kind of not really common that those things happen. First of all, it's weird to consider something an outlier if there's been multiple events of them happening. But yes, those are outliers, and they're very specific examples just to show you what happens to things like gold in times of chaos and economic uncertainty and blood in the streets. And I'm going to tell you what I've told you. I've told you already, if you've been around to this channel, and if you haven't been subscribed, please do so. I've been telling you guys that, like Warren Buffett says, when everyone else is greedy, be afraid. When everyone else is afraid, be greedy. And complacency is through the roof. Investor complacency is a really negative symbol or sign of what's to come. Not enough fear in the markets, especially for where we are right now. There's no question in my mind that we are up for something very bad to happen very soon. And I'll give you some headlines too that recently came out, which will give you a better understanding of where I'm thinking that we are at right now. What I've told you before is that gold's going to recover first and fastest when it does get hit. But does it always get hit? And I told you that the best times to buy anything is when there's blood in the streets or when there's a capitulation point. I've also told you that more millionaires were made during the Great Depression than any other time in history up until that point. And as I've told you for ages, there's a massive detachment getting worse, and now it's complete, between the economy and the stock market. The stock market used to reflect the companies in the economy based on their successes and failures, how good they were doing. That's got nothing to do with each other anymore. The economy and the stock market have been separated. They're two different things, and they manipulate the stock market. Anything that's manipulation that's artificial, anything artificial is temporary. So you can say, well, lower interest rates and print a bunch of money. It still doesn't solve the original problem. It just extends your lifeline or your runway. So just before we get into what happens to gold in times of commotion and chaos historically, I'm going to give you some points about why I'm telling you that this economy is about to crack and everything's going to be different on the other side of that moment. And just wait for a second here to get to the point where I show you the chart that's going to blow your mind. You can't unsee it, and when you see it, it's going to completely change the way you invest starting today. It might make you make some actions today when you see this chart. Specifically the chart of the Economic Uncertainty Index. But first, a couple of headlines. Weekly jobless claims Jump more than expected, latest sign of economic softening. The Federal Reserve's favorite recession indicator is flashing a danger sign again. They're talking about yield curve inversions, and they're saying that the previous inversion happened in October 2022. And there's still been no recession for 2.5 years. This is why I want you guys to understand the way that I look at things. Yeah, it's been 2.5 years after the economy shut down, reopened, and it gave us unnatural long life. But also, more importantly, they say it still hasn't happened for 2.5 years. Well, then it'll take 3. And if it takes more than that, then 3.5. The recession is 100% inbound. It's coming, it's going to happen, and it didn't matter who the president was, just for the record. It was going to happen either way. But now that we've started a global trade war for some reason, this recession will get here stronger and more extremely than it otherwise would have. But you need to see this chart. We're talking global now, not just America. The World Uncertainty Index from worlduncertaintyindex.com. One glimpse of this makes you understand that we're at a very dangerous point right now, because I always tell you that the most dangerous thing for the stock market is uncertainty. It's not bad news, it's uncertainty. There's plenty of uncertainty in all the examples I'm going to provide to you right now. So let's start with the most recent one. The global financial crisis happened in 2007, 2008. And then we'll get into the dot-com bubble bursting. Then we'll get into the big crash in 1929. And I'll overlay charts on top of each other to show you guys clearly what actually happened. The global financial crisis. Gold stocks tend to perform well during economic recessions for a few reasons. Firstly, gold's often seen as a safe haven asset. Investors flock into it in times of economic uncertainty. There's that word again, you guys. Secondly, when the economy is weak, central banks often lower interest rates, which can weaken the currency and make gold more attractive. Do you think that they're going to lower interest rates? When this market does what I'm telling you it's going to do, they're going to lower interest rates. And finally, during recessions, there can be increased volatility in stock markets, which leads investors to seek the stability that gold provides. And generally, you can say that gold mining stocks, even though there's a delay, and even though it's completely detached and weird right now, if gold prices increase, the stocks that mine for that metal and sell it should be increasing equally or even by tremendously more. Go back 1,000 years and you'll see that's how it happens. Right now, things are so upside down and weird. So I've got some charts overlaid. There's Newmont Mining. I marked off the global financial crisis and the dot-com bubble burst, and I've got Newmont Mining and Barrick Gold, both of which I own. So you can see how they performed at those specific times. During the bursting of the dot-com bubble, gold mining stocks often performed well relative to the broader tech-heavy stock market. So keep in mind that too, that all the tech stocks were crashing. And even when gold went down a little bit, it went down a lot less than the tech stocks. So comparatively, you're actually getting in a better position in terms of wealth. But gold mining stocks and gold prices went higher in that time. And you can see on this chart exactly by how much. Investors who panicked and sold their gold along with all their tech-heavy stuff and all their Magnificent Seven stocks didn't do as well as somebody who just held gold and didn't even worry about it. And this is what I'm trying to tell you too, by the way I invest. It doesn't need to be a really stressful thing. You don't have to have a heart attack because of this stuff. You could just invest well in something like gold and understand, learn that it's not going anywhere, and you can just take it easy and allow it to do its thing. Good investing, which I've been telling a lot of people lately, is really boring. And the best investing is the most boring that you'll find. But sometimes doing nothing is a better decision than doing something. Own gold, gold mining stocks, silver, silver mining stocks. This is the ones that don't go out of business, the good ones that are Peter Leeds approved, which you can learn about in the peterleeds.com newsletter, details below. But don't ever overtrade or overthink things. Just position yourself and then watch the world go by. And at the end of the day, on the other side of things, a lot of other people will be in a lot of financial hardship, but you will be in a better place than you would have been. Back to the dot-com bubble bursting. As investors fled the collapsing tech sector, they sought safer investments like gold. This increased demand for gold typically boosted performance of gold mining stocks, which are often seen as a hedge against stock market volatility and economic uncertainty. You're starting to get it? 1929, the great stock market crash. And a lot of things are very similar to back then. Complacency among investors, the fact that more retail investors are buying Magnificent Seven and all the same stocks because they got the Robinhood app that doesn't charge them commissions. There's a big growth of people living on credit, a massive expansion of credit. So many things are similar to the great 1929 stock market crash. But regardless what happened at that time, there's an increased demand for gold because of the economic chaos. During this downturn, gold was set, the price was set at $20.67 before the 1929 stock market crash. But in 1934, FDR revalued gold on the books to $35, where it sat until the early 1970s, which then they took us off the gold standard, closed the gold window, and all of a sudden, it's just another fiat currency. Everybody gave respect and value to the American dollar because it was backed by actual gold, actual money. But those days are gone. We're in a different situation now where every currency in the world is a fiat currency, except for the ones that are going to be used by 60% of the global population, which are the BRICS nations, which is going to be backed partially by gold. The significant jump in 1935 occurred due to President Franklin Roosevelt's policies, particularly the Gold Reserve Act of 1934, which revalued gold and prohibited private ownership of gold coins and certificates. The U.S. government effectively took control of the nation's gold supply, fixing the price at $35 per ounce until the early 1970s. Now, just before I tell you what I'm going to be doing about all of this, a couple of things. I'm going to tell you a summary of what happened during the crashes, not just the ones I talked about, but in general with any kind of economic uncertainty or recession. Not always, and these gold mining stocks can get hit pretty hard for a brief window of time. If the commotion gets worse, gold prices go higher, the stocks go back to where they should be. But to look at all these major events in one, let me sum this up for you. Gold mining stocks tend to be seen as safe havens during economic downturns. Historically, their prices often rise during recessions and stock market crashes, as investors look for more stable assets. For instance, during the Great Depression, the 2008 financial crisis, and other periods of economic instability, precious metals saw increased demand and higher prices. So what I'm going to do is not be stressed out. I'm going to hold, even though I sold some gold mining stocks recently. Anybody who's a subscriber to the newsletter knows why I did it and why it wasn't anything to do with the companies themselves. I'm going to be holding through all the chaos, and I'm not going to worry about it. And that's what I always tell you too. When gold prices drop $50 an ounce, $100 an ounce, people think, what should I do? Should I sell? What should I do? Is it an opportunity to buy more? Ignore it all. Gold is not going away. It's a commodity. It's like saying pork bellies are going away, or cotton, or coffee. Gold is going nowhere except up because it's a reflection of the deterioration of the dollars you use to buy it. Whatever currency you buy gold in, it's at a record or close to a record all time right now. And I believe it's just getting started because a lot of the drivers for gold are still in place and a lot of them are just getting warmed up. And this big economic pivot is going to come along with the recession, which is inbound if it's not here now. All of this is going to be causing so much commotion, such hard times, people are going to flock to safety, stability, and away from volatility. They're going to do that by buying gold physically. They're going to benefit by owning the companies that mine gold. And the other thing I did is that I sold some gold mining stocks to two different accounts, and I'm building up cash position in both accounts to take action of all the great opportunities that are about to arise as we go through this big economic pivot that I've been telling you about, which is why you subscribe to this channel. But if you're a subscriber to the newsletter, you know that I've already invested one of the big cash positions into one stock that's trading at about, 35 cents right now? And it's not a gold mining stock, and this stock is going to do tremendously well. So I built up cash to be prepared. I lowered my exposure a bit. You guys know that almost all of my investments are in gold and silver mining companies. Almost all.